Hello, this is Trading with Confidence and I'm John Breland. Today we're going to get into the nitty-gritty of the patterns that the Surge Oscillator makes, and we're also going to include the stochastics to show the actual signals that you can take in the market, and then I will show examples of all those signals with historical price data. So let's get started. Today I'm going to talk about the patterns that the oscillator provides with price. And so I've drawn this chart here. There are 6 panes in this chart showing the different patterns. So the top panes are the buy patterns, and the bottom panes are the sell patterns. And then we have a trend continuous pattern, a trend reversal pattern, and also another trend reversal pattern. So the first column are for fast moving markets, the second column are for a little bit slower moving markets, and the third column are for even slower moving markets. So for a fast moving buy, what we tend to see is when the market moves up, it'll eventually do some kind of pullback, and the pullback typically looks like a Z. And the signal is when you see a lower low on the Z and a higher low on the oscillator, and then there's a turnaround. And that's typically a pretty good buy. Let's go to the second one. The second one is a similar pattern like this one, but it's a little bit more extended. And there's a little more time taken in this pattern. And what you see the oscillator doing is it gives the back divergence in price and the front divergence in price. And then there's a buy condition when the oscillator turns. So when I say the oscillator turns, I don't necessarily mean when the surge oscillator turns. It can be stochastic oscillator, which is a little bit more accurate with the actual turns. The third one is a trend reversal as well. And this is when the market is moving down relatively slowly. And so you get this back divergence and then this front divergence, which appears one oscillation later in time. And then, of course, you take the stochastic as a buy here. So the difference between this one and this one is that you'll see that the surge oscillator will go lower in this instance than so this is a 1, 2, 3, 4 turns, 1, 2, 3, 4. You'll see in this case the oscillator gave a divergence with price. In this case, you see the oscillator not taking a divergence with price until the next couple oscillations. So that's the pattern 3 trend reversal buy. So now the sells are the exact opposites, and I'll go over them real quick. For the fast moving market sells, you see the market move down and then a Z pattern up with a front divergence on the top and then an oscillator turn up here. For the trend reversal pattern 2 sell, you'll see the market move up like this, then you get a back divergence and a front divergence with price, and then the oscillator turn here is the sell. And then for the longer drawn out markets, as the market moves up somewhat slowly, you get the back divergence in here, then you get finally get the front divergence with this one, with this price, and then there is a sell when there's a stochastic turn. So those are the 6 signals broken down in their simplest form, but the market is somewhat like snowflakes. We can all detect a snowflake, what a snowflake looks like, but every snowflake is a little bit different. And so when you look at the actual signals in the markets, you'll see some creative versions of these signals, but the signals will still appear and be recognizable. And so now I will go into some examples of that. So here is an example of a pattern 1 buy. You can see that the market has been moving up and then it has a Z pullback here. And the pullback is, you see lower lows on the pullback, and you see higher lows on the surge oscillator, and you see the stochastics turning around down here. So after this candle here, this is the buy for continuance up. So the market was moving up, it pulled back, gave this divergence, an oscillator turnaround occurred here, and the market continued up. That is a pattern 1 buy signal. Okay, now here is a pattern 1 sell signal. So in this case, what we see is the market moving down, the Z pattern coming back up with a surge front divergence. You can see that there is no back divergence here, and then the stochastic turns up high, giving a sell signal. So there's your pattern 1 sell signal. So this is an example of the pattern 2 buy signal and the pattern 2 sell signal. They just happen to be right next to each other in the market in this case. So for the pattern 2 buy signal, you see the market starting off with a high. It makes a new low. It creates a lower high and creates a lower low right at a stochastic turn. So the oscillator is making, instead of lower highs, it's making higher highs, and it's making higher lows as well as we go forward in time. And so this is that pattern with the oscillator turn, and the buy is right here, and you can see it was a pretty good buy. Now the sell also occurred right up in here. So the sell is the exact opposite. You can see the market is making higher lows and higher highs, whereas the oscillator is making lower lows and lower highs. And then the turn of the stochastic gave you the signal to go short. So you can see how this this surge oscillator is actually filtering out the stochastic turns that are not the good ones. For example, in this case, it found that this was a good one. This one was not a good one because it ended up possibly losing money here. This one was not a good one, even though you could have made some money, but really we're talking about this trend right here. And it allowed this one to be filtered in. So this was the right stochastic turn to take. So this is one of the features of the surge oscillator. It filters out the bad stochastic turns for you. Okay, so here is an example of a pattern 3 buy. So what you're seeing is that the market is having a lower high, another lower high, while the oscillator is having a higher high. Now these look pretty much the same, but measured, this one actually turns out to be a little bit higher. But the difference in angle especially is some kind of consideration as well. This is definitely moving down this direction. This is a little bit higher, if not flat. And then at the bottom, you have a very steep lower low, and we've missed this particular area here. Now this is interesting because the stochastic in this case was way on top, while the surge was, down low like this. So then the surge made a final divergence with price, and then the buy was right here, right at the cross, and the cross occurred pretty much right here. So it's interesting that even though this very large down move, the surge still had a divergence. This is why I think the surge is really a very special oscillator. So this is an example of a pattern 3 sell. This happens to be at the very top of the Bitcoin market. And as you can see here, we have higher lows. And this is not necessarily a higher high, but at the case where the oscillator started to turn around, we had a high here, and the next time the oscillator turned around, we had another high. But what happened is the oscillator was pretty much flat. So when I have a very large deviation between the price and the oscillator, I consider that to be a divergence. And the stochastic oscillator was high and turned down here. This happened to be at the top of the market. So that's all I have for this video. If you have learned something new, please like and subscribe. And I hope to see you in the next video. Thank you.